Good morning and welcome this morning to Trading Futures, another great webcast from Schwab Coaching. It's nice to be trading futures on St. Patrick's Day, so top of the morning to you. I hope that your futures are bright. Okay, sorry, I had to get that in there. Good morning and welcome. I am lucky this morning to have one of my favorite redheads. I married my favorite redhead, but one of my favorite redheads, Connie Hill, out there in the chat. She's helping out this morning, facilitating the conversation. Welcome to all of you, and thank you for being here for this Futures webcast this morning. Connie's there to help facilitate the conversation. She's going to be there answering questions. If you've got a question, be a part of the conversation. Chat those questions in. If you're watching this in the recorded version, we're glad to have you with us as well. And you can leave a comment in the comment section if you are in the recorded session. So some stuff moving already this morning, as it often does in the futures market. Early on, we're going to take a look at that. We're going to take a look at what's been going on in energy futures as well as metals futures. And we're going to take a look at what's going on with the equity futures this morning. So let's jump on in here. A couple of quick housekeeping items that we need to take care of. As we get into this discussion, again, remember that everything that we talk about simply for illustrative and educational purposes only. It is not any kind of a recommendation or endorsement of a particular strategy or an account type. Remember that futures and futures options trading involves substantial risk. It's not suitable for all investors. In fact, it requires separate trading authorization. Make sure that you read the risk disclosure statement for futures and options prior to trading futures products. Also, remember that futures margin requires a performance bond or an initial and a maintenance margin in order to enter and maintain a futures position. And that's whether you're going long the futures contract or short the futures contract. We'll talk about that. If we talk about virtual currency derivatives during this discussion today, remember that those products have unique and significant risks. Make sure that you read the NFA Investor Advisory and the CFTC Customer Advisory on those products. Also, we're going to be using the thinkorswim desktop software platform. It is a great learning environment. It is not, however, a guaranteed future success out there in the real world. For that, you need a leprechaun. No, I'm kidding. But being it as it is paper money, it does perform a little bit differently than the real money account, namely in the nature of order fills and use of studies and the assignment of short options. Also, we're going to use technical analysis, not a guarantee future success. It is theoretical in nature, as is any method of evaluating the market. Now, one thing I do want to point out, and I've reiterated this before, I'm going to say it again. Stop orders behave differently for futures contracts than they do for equities. Stop orders generally are not guaranteed an execution. And stop orders that generate a market order will, due to exchange rules, will be substituted by the exchange for an exchange designated limit order that will get worked within a protection range. If the market moves outside of that protection range because it's a fast moving market or for other reasons, there's the possibility that a stop market order will not fill or be rejected. And so some of the things you have to pay attention to when you are trading the futures market. Let's take a look at what's going on here in the market right now. Taking a look at the S&P 500 E-mini futures. They are up on the day slightly, a little bit of a bounce off of that 200 period moving average. And I think that perhaps was a level in hindsight that many traders, I don't know most, I don't know all, but many futures traders were looking for as a possible level of support. It seems as if, of course, that's not a guarantee that it's going to do it again, but it seems as if that acted as a level of support. The RSI came up off of that lower reversal zone, starting to see a little bit of upward movement here in the /ES, the S&P 500 E-mini futures. So continuing to move a little bit higher here. There was a little bit of a push to the downside, now starting to move a little bit higher here. The NASDAQ futures, we had a little bit of a gap down to the open and then a rally. And we're starting to see this move, in an upward direction. Still, the RSI moving a little bit higher here. These are daily candles, so these are really incorporating just this initial movement. We'll see how this plays out. But you can also see how the range has kind of narrowed itself. And the Russell 2000 futures here up fairly strongly. In fact, bouncing up around right about a 1% move higher here on the /RTY, the Russell 2000 futures, and a pretty solid kind of skewed double bottom reversal there off of that lower reversal line in the RSI, that relative strength index, or in other words, a momentum indicator of that possibility that price is moving a little bit higher here. So running in perhaps to a key resistance level around this 25.48 to 25.50 mark or so. So what I want to do really quickly is I want to cast or I want to change over to my single grid, which is kind of this overall picture. This is kind of my sandbox, if you will. I'm going to put the RSI on here on the sandbox. I've got the 50 period. I'm going to put the 200 period on here as well. We're going to click apply and OK. So there's our RSI. And I'm just going to go through a couple of the different futures contracts here just to kind of see what's going on around the world of futures, if you will. /VX, VIX futures. Down a little bit, but still sitting kind of in that 22 half range, the kind of the middle of that 22 handle. So volatility futures, VIX futures, which it moves differently than the VIX itself, because this is a tradable instrument and the VIX is not. The VIX is the reflection of what that implied volatility is on the SPX options, the index options. This is a tradable instrument that trades around that particular movement. This instrument down a little bit. Let's take a look at this. I'm just going to put a comparison line on here really quickly. COMP, comparison. We're going to pop up here to that comparison line. I'm going to change the symbol on the comparison line to VIX, the volatility index. And we're going to click OK and apply and OK. And if you zoom in here, you can see that there are times when the futures move a little bit differently than the VIX. Now, what's interesting is because the VIX is an index and it's not tradable, you can't buy or sell the VIX, but you can buy or sell options on the VIX, and you can buy or sell or go long or short, in other words, contracts on VIX futures. VIX futures are one of the ways that movement in the VIX gets translated into speculative price movement, right? So if a trader felt that volatility might increase, he or she might go long VIX futures, but they might hedge that using VIX index options, or they might hedge it using VX futures options on the futures contract. It gets to be a complex relationship. So just remember that these relationships are sometimes complex because when you're talking about trading a futures product against a non-tradable instrument, or the movement of a non-tradable instrument, it is one of those things that you have to make sure you understand the product that you are trading in this particular relationship. All right, so let's do this. Let's come back to our single grid. I'm going to take that comparison line, or I'm going to hide that comparison line. I'm going to keep it on my tool set, and we'll pop back out here really quickly. All right. So Dagan asks a great question. Could you please help us to understand how do we figure out a trend, bullish or bearish, for futures contract? Yeah, that's interesting. And it's one of the things that we talk about in our technical analysis webcast. It's also one of the things that we talk about. We just got done talking about this weekend in Atlanta in the technical analysis and option strategies workshop that we did. So let's take this one right here. This is crude oil. And this is kind of interesting. I'm going to squish this down a little bit here so that you can see this. And I want to give this a little bit of room. Let me see if we've got some room here. Okay. All right. There we go. Apply it. Okay. So let's talk about trend. What is a trend? A trend is a pattern or a sequence of movement in the price of an instrument or in a data point, and it tells you which direction generally that data is moving. Is it moving higher? Those prices or data points getting higher in value, or are they getting lower in value? So one of the clearest definitions of trend is an uptrend consists of higher highs and higher lows. A downtrend consists of lower highs and lower lows, and a sideways trend consists of roughly similar or equal highs and lows. So if I zoom in on this nearer time frame on this is crude oil, I can see that over the course of the last few weeks, crude oil has been making a series of higher highs and higher lows. So we can objectively say the crude oil is in an uptrend. As we saw earlier in the year, you come back to this time frame here. Maybe we zoom into this time frame, and we can see that crude oil had been making lower highs and lower lows. Now we've put a tool on here, those moving averages, the 50-period moving average, the 200-period moving average, that give us kind of an approximation of that trend, where the highs and the lows are, so we can use those as a trend definition. So if the 50-period moving average is turning up, that's an intermediate time frame uptrend. The 200-period moving up average is moving up. That's beginning to become a longer term uptrend. Likewise, if those are going down. So right now, at this particular point, we have an intermediate term and a long-term uptrend on crude oil futures. Short term, on the other hand, starting to pull back a little bit and starting to see crude oil kind of backing off with a big bearish engulfing candle yesterday in the last trading session, opening down towards the bottom of that candle and giving us a little bit of a shooting star, or sometimes referred to as a tombstone doji, with that possibility of downward movement. Not a guarantee of that downward movement. Now, we also wanted to talk a little bit about metals here. I'm going to take a look at /GC. This is gold. This is the gold futures contract, and it has been climbing that 50-period moving average pretty consistently, bouncing up off of that support, bouncing up off of that support, bouncing, at least right now, up off of that support. But what I see happening here is that bounce off of support without a lot of momentum behind it. That momentum kind of, the RSI, that relative strength index, a gauge of where prices are closing relative to the highs and lows. Now, this is all basic technical analysis. This is not necessarily specific nor unique, nor exhaustive of the technical analysis that we could do on futures contracts. So this applies to whether you're talking about the futures, or whether you're talking about price movement in general. All of these elements are kind of at work here, but I wanted to look at these in terms of these specific metals. Let's take a look at one other metal that is perhaps moving a little more bullishly, /HG. This is copper. Was moving a little bit more bullishly, now starting to sell off a little bit here. We kind of had those side-by-side candles. So copper starting to move down a little bit more, although we'll see what that is doing in the short term. So metals. Now, the other one I wanted to look at really quick before we jump into a couple of specific trades, /DX, and that is the dollar index futures. This is one way to gauge the value of the US dollar against other currencies. And we can see that the dollar over the course of the last few weeks had been making strong moves to the upside, now starting perhaps to weaken a little bit. Nevertheless, you look at where this is in terms of its movement, and we're right back down on a support level that has been in place. It's either been resistance or support for much of the year, right around this 99.25 level. So we do have a little bit of a support level going on in the dollar index, the dollar kind of right back down on that support level. So we'll look at that on a shorter term basis here in a minute and see if perhaps there's something to be done. So now what I'm going to do is I'm going to pop down here to our futures grid. And the futures grid is a tool that I've used in this particular discussion. It is simply a two-part grid. For those of you that don't know how to build those grids, there's some great webcasts in our Trader Talks webcast page that talk specifically about building grid charts and how do you set up those grid charts. I'll even go ahead and I'll share this grid. So I'm going to come up here to the grid label here, and I'm going to go ahead and share that grid. Now, whenever we share anything like a grid or like a study or a chart tool or anything else, remember that is for illustrative and educational purposes only. It is not guaranteed as to time or accuracy. So I'll share this grid with you. It's got the labels on it. It's got the different tools that I use. Left-hand side is a longer term chart. Right-hand side is an intraday chart. So let's start with this trade on the right-hand side, and I'll show you what I did earlier this morning, and I'll show you how that has kind of resolved itself, and then we'll kind of back out of this trade and see what is going on. So I'm going to jump in first of all to this right-hand side, and I'm going to zoom in. So what I was seeing happening as I was getting ready for the webcast was this scenario starting to build itself up. I saw a short-term impulse move, meaning a strong momentum move. Now, I've got the ADX. The ADX is a trend strength gauge, if you will. When the ADX is above 25, that's generally a strong trend. When the ADX is below 25, up or down, that's generally a weaker trend. So I saw that the ADX was above 25. We were starting to see this move to the upside. This was a bull flag. And I'll tell you what, if in hindsight, and you don't oftentimes see this, but in hindsight, this was about as textbook a bull flag as you could really get in this particular case. You always see these in hindsight. You're not going to see these going forward. I mean, in looking at the future, because nothing is ever perfect and nothing is ever actually textbook, but this is pretty close. So I measured this move from that previous level of support to that high, and I was right here in this pullback. So 1 or 2 candles into the pullback. I took that move, duplicated it, and put it up on top. So I set up my entry as a breakout of the high of that range. Let me zoom in a little bit more. So this is where I was looking at my entry, and I put my entry at 67.74.25. Okay. And I put the measured move or the expectation for this bull flag, if it became a bull flag, because you don't know going into it if it's actually going to become a bull flag. It has the potential to become so. And I set the target for the trade at 67.97.25 and set a limit order to sell at that point. So this was a buy stop at 67.74.25. This was a limit order at 67.97.25. And this was a stop order that said, stop, wait, don't do anything unless the price gets to 67.65.25 and then exit. Now, remember, when I place stop orders, whether those are buy stops, whether those are sell stops, none of those guarantee the price at which we're going to get filled. Because remember, if it was just to stop generating a market order, that market order theoretically is going to get filled at the next available price. But remember, the exchange is going to take an order, a stop order that creates a market order, a marketable order, and it's going to work it as an exchange designated limit order. So there's going to be a protection range. There's still not going to be a guarantee about what price we're going to get filled, but there's a range or an area in which that order will fill. And if it does not fill in that range, if it moves beyond that range quickly, there's a possibility that that order could get rejected or not fill at all. By the way, speaking of getting filled, I would love it if you would fill up our feedback survey. It's kind of like a pot of gold for us as instructors, because we take every comment that you make as a nugget of gold wisdom. Connie's put the link down there in the chat. If you wouldn't mind just clicking on that, filling that out, or clicking on it, setting it aside, and then coming back and filling it out. So this trade went off when that break above that resistance level occurred, when the price moved to 67 74.25 or higher. We got into the trade as a demonstration. This is an illustrative example, not a recommendation, and it moved in the direction that we wanted it to move. And I had a stop order in place. That stop order was there. That was a one cancels other, an OCO bracket order. So if it had gotten stopped out, if it had gone down and that order had filled, the order to get out on the top side would have canceled theoretically, right? If it had gone the other way and gone up, which is what it did, and it filled at the top side and got out, this order went away. Now, can that happen both directions? If you place a tight OCO bracket order, especially in a futures contract, where that market may move very, very quickly, there is the possibility in an OCO bracket order that one side and then the other could get triggered and filled if the market moves very, very quickly, if you get a very quick oscillation. So when placing bracket orders, OCO bracket orders, remember, there is that slim, though it may be, there is a very real possibility that that order could get moved, could get bumped or filled on both sides before the other side has a chance to cancel or fill. So Hans asked a question: how do I use ADX in the analysis? ADX, or average directional index, is a Wells Wilder tool, and it simply is looking at pressure, basically. Where is the pressure happening? So if the stock or the instrument, in this case a futures contract, is moving up and you have an ADX number that is higher than 25, that's considered to be a strong trend. Or if it were going down and the ADX, because the ADX is direction agnostic, if the trend was going down and we had an ADX number above 25, that's a strong trend. So I noticed that as this was coming into that sideways pattern, that ADX was staying up here in about the 50 range. This is still a very strong trend. In fact, it still is. In fact, that trend indicator, that ADX, is still up around 86. So this trend is still strong in this particular case to the upside, because that's the direction that price is moving. Now, I know that we've got, here's the thing, I know that we've got a number of new attendees to this futures webcast. So I want to pop over to the other grid side of this grid so that we can kind of see the characteristics of this trade, and then we'll kind of break it down a little bit. So I'm going to go to the other side of this grid, and that is our 1 year, 1 day chart. And I have a label up here that tells me a little bit about this futures contract. The tick size for this futures contract, which is the micro E-mini. So this is the S&P 500. And this is the micro-sized contract. So this is a tenth the size of the /ES. But there are some elements that we need to pay attention to as we're looking at a contract, a futures contract. The tick size, the minimum movement increment. And so the tick size is 0.25. So what you notice is that this 6803.25, notice that 0.25 moves from 0.25 to 0.50 to 0.75 to 0.00. It doesn't go to 0.24 or 0.21 or 0.19 or 0.67. It moves in 0.25 increments. That's the smallest increment of movement. And when that increment changes, when that moves from 0.25 to 0.50, that's $1.25. Okay. Kelly asks a question: does the ADX work equally well for all time frames? Yeah, it does. Kind of cool, that indicator that way. Now, the point value, when this point right here, 6803, when that 3 moves to 4 or 3 moves to 2 or whatever that incremental or decrement is, that point value change is going to be $5. So that's how you calculate the dollar value of the movement of this contract. So you take that point value and you times it by this price of the contract, whatever that price, that contract is priced at, and that gives you the notional value, or in other words, the leverage, the amount that's being, if you think about it, the risk in that contract, or notional value, what that contract value is. So if this moves The point value is going to stay the same. So if this price moves, this notional value is going to change relative to that price. Now, you're going to always see that information, or at least the tick size, tick value, point value, if you click on the drop down and you go to the futures sub tab and you look at this contract. Now, you've got all of the futures contracts that are available /MES, the micro E-mini, tick value, 0.25, tick size, or excuse me, tick size 0.25, tick value 1.25, and then you're going to see the initial margin to enter a trade, in this case, both long or short. And generally, those are going to be the same. Sometimes those are different. There's a greater sometimes initial margin depending on where momentum and risk is, and volatility. There may be a greater initial long margin to get into the trade than it is to go short the trade, to go long in the trade than it is to go short the trade. And then there's going to be a maintenance margin once that position is established. That maintenance margin generally is going to be a little bit less than the initial margin because you have the value of the contract that's either gaining or losing, and then the maintenance margin to hold the position. So these are important pieces of information that we need to know. These initial margin amounts can and do change, and they can and do change because of volatility often. The exchange can change those as they need to maintain risk. So let's do this. Let's take a look at this particular trade. I'm going to go over here to the monitor tab. I'm going to come down here to futures and we'll see what happened. We're going to pop up this MES. So I entered the trade and I got out of the trade where theoretically, as I put the trade together, this was a kind of nice textbook example. Doesn't always happen this way. I ended up with a gain of $115 on that trade. I want to break this down a little bit so that you see what that was and what that movement was and what that translated in. So let's go back to the chart. Let's go back to the right-hand side and let's look at this trade. So my initial entry was at 67.74.25. My stop was at 67.65.25, and my target was at 67.97.25. So I kind of lined those out here, and I put those in. So my entry, 67.74.25. My stop, 67.65.25. My target, 67.97.25. So what I calculated from that is I took the up move, and the up move was simply my entry price, or the target price minus my entry price. That's how far it could move up theoretically in the way that I was constructing the trade. My down move was how far the price of that contract could move down tick-wise or point-wise before the order got triggered. So I had a potential up move of 23 points, a potential down move of 9 points. So if you want to think about it from that standpoint, risking 9 to accomplish 23. I'm not saying making or losing, risking 9 points to the downside to get 23 points of move to the upside. Then I translated that into ticks. So I took the point move, the 23 or the 9, and I divided that by the tick size. Remember what our tick size was? 0.25. So I'll just show you 23, which was our up move potential, divided by 0.25, which is our tick increment, gives me 92 ticks. Likewise, 9 points divided by 0.25 gave me 36 ticks. So I had 36 ticks to the downside potential, 92 ticks to the upside. So how much was each one of those moves potentially worth? Well, if I had 92 ticks to the upside times the tick value, which was 1.25, that gives me $115 potentially to the upside, and 36 ticks times $1.25 gives me $45 to the downside. So I was risking in this trade from a dollar standpoint. Think about this. Now, that's not absolute, because remember that market order and that stop order to get out, the stop order to get in and the limit order, those could have filled at different prices, but just objectively as I calculate this. So I have to do a calculation to get this, doesn't guarantee that that's what it's going to be. So don't get wrapped around the axle about the precision here. But I was theoretically risking about $45 to make 115. So almost 2-to-1. In this particular case, doesn't always work out that way. But that's kind of the formulaic layout of this particular trade. Now, I'll tell you what I'm starting to see happening here right now is the same thing. ADX is still high. So this is still a strong trend. But what do we have? We have this upward movement. That's a candle. That's kind of the flagpole portion. We have a pull back into a support level. So you know what? I'm going to do the same thing. Right click, duplicate that drawing, and I'm going to take that up here, and I'm going to say, all right, there we go. I'm going to put that on top. I'm going to use this level right here, 6807. I'm going to draw my line here at 6807. And I'm going to say, all right, cool. If price breaks above 68, we'll go 6806.75 in this case, then get into the trade and get out at 6829.25 or get out at 6796.75. So let me just label these really quick so that you can see what type of trade we're putting together here. So this is going to be our target. This is going to be our new entry price for this trade. And this is going to be our stop price. We're just going to try to do this again if it bounces. Now, Barbara asked the question, do you want 2-to-1? You don't have to have it. That's a personal preference for sure. 100% personal preference. So what I'm going to do is I'm going to see if we can get that bounce. I have no control over that. So I'm going to create an if this then that statement here. And yes, Ted, as far as I know, those are anonymous. So if whatever you want to say to me, you can say to me. I'm happy to hear it. I'll read every bit of it. You can also follow me on X at Ben Watson CS. You can follow Connie on X at Connie Hill CS. We'd love to have your comments there as well. So let's put this trade together quickly here. 6807. I'm going to buy custom with OCO bracket. So we're going to create this trade real quick. I'm going to push this off to the left-hand side, and we'll see how this works. So our entry price is going to be a buy stop. Okay. Now you could use Fibonacci's as well. So we're going to make this a buy stop because if we put it in as a limit order, it would fill right now. I don't want it to fill right now. I just want that to get in when it moves back up. And we're going to go to 6807.25. And that's going to be our buy stop. And then our target to the upside we said was going to be 68. I'm going to call it 68.27 or 29, 68.29.75. 68.29.75. 68.29.75. You notice how that I'm making it 70.75, and that's going to be a limit order. I'm going to make that good till canceled, and then my stop is going to be 67.97.75. 67.97.75 if it goes down. And we're going to make that a stop and good till canceled. Remember that stop is going to get worked as an exchange designated limit order, as is this buy stop. We're going to click on confirm and send, read through this order and make sure that this is what we want it to do. Here's our initial margin that we have to hold in this particular trade. So we're not necessarily buying this contract or selling this contract so much as we're going long in the contract or short the contract. And in order to initiate that position, we have to have that initial margin held in our account. Then whatever that contract gains or loses is what marks our position value. I'm going to put this in my futures group, and we're going to click on send. Again, read through the order, make sure that's what you want it to do. Make sure you open and close. And so make sure that that's what you want it to do. Click on send. We're going to fire that order off, and we'll see if that fills. It might not fill. In fact, as it's starting to move down here, we're starting to lose a little bit of that trend strength. starting to roll over just a little bit here. So we might not get that order filled here in this particular case. So user SJ asks question, will commission need to be paid on all 3 orders? It's for the 2 that get filled in that particular case, because the 1 will go away. So those are transaction costs and order costs that will be paid for the orders that are filled. So we're starting to get a little bit of a bounce here. And maybe that move back up to that entry point. We're not quite there yet, but it's starting to bounce up off of that support level in this particular case. Excuse me, and maybe making that move to the upside. So let me do this really quick. While we've got a second here while we're watching this, I want to pop over here really quick to this page right here. If you are brand new, because remember, I said that we've got a number of new folks here. Welcome to you. We're glad to have you here with us. Write this down, schwab.com/futures. This is going to be a great landing page for you to get started with in understanding trading futures. Trading futures is something that requires some attention to be paid, as does all trading, but futures especially. Now, once you start to understand the futures market and how it works, it's simply a leprechaun of a different color when it comes to trading, because it has its own characteristics and its own contract descriptions and methodologies and so forth. So this is a great landing page. It also has some information about why trading futures through Charles Schwab, has some information about the characteristics of when futures markets trade, and some of the things that you can learn about how futures trading works. So we've got trading education, we've got our coaching, this webcast. We also, in our advanced options workshop out on the road, we teach an introduction to trading futures segment in that particular case. And so you've got a lot of information here. Now, if you want to learn a little bit more about a particular topic within trading futures, this is a great place to come to, our Trading Talks webcast page. If you have not been here before, we have one simple ask, and that is click on the subscribe button. That way you are connected to the Trader Talks webcast page. You're following the Trader Talks webcast page. Makes it easier to find that information. But you can then come over here and you can search for hedging. So for instance, hedging with futures, for instance, and hedging event risk. When is a hedge too big? Futures is a hedge. Hedging stock trades by buying put options. So you've got a lot of information about that particular topic. And so this is a great resource because you can go back into those webcasts and you can see what those characteristics are. You can see those particular webcasts that talk about a particular topic. I know somebody asked the question about ADX. So we're going to type in ADX. So here's a webcast that I taught, or actually Connie Hill taught this one. I figured that was probably Connie Hill because I know Connie has talked about this particular indicator before, using ADX to determine trend strength. Here's Cameron May talking about the ADX indicator. So these are great resources in this particular case. So Kelly asks a question. I'm confused about the dollar transfer from my brokerage account to place a futures trade. Is that automatic, or does it need to be pre-funded? If you have the capital in that futures account to satisfy that initial margin, that amount will be automatically tied up for that futures trade. That is my understanding. So for specifics about your particular account, great opportunity for you to call the trade desk or get in touch with your financial consultant at the branch. So those are good questions to ask. JV Texan says, am I teaching the advanced options class in Dallas next month? Yes, I am. Users SJ says, are there ways to choose the expiration of a futures contract? Let's pop back over here to the thinkorswim platform and let's take a look at the trade tab. We're on the /MES. So let's take a look at /MES and that futures. So there are generally, let's pop right down here. There are generally more than one active contracts for a futures contract. You see that for /MES, this micro E-mini contract, we've got a March contract that is 3 days to go from expiration. That is no longer the active contract. It has not yet expired, but the /MES M26, the June contract, is now the active contract. The thinkorswim platform is always going to flag the active contract. Another way to see the active contract is generally in trading volume and open interest. And generally, the active contract is going to be the one that has the greatest amount of trading volume. And so you'll start to see that volume transitioning from the current contract to the next most active as you get closer to those what are referred to sometimes as delivery dates or settlement dates in terms of those expirations. So, for instance, so Ted asks the question, how do VIX futures settle /VX? Whoops, let's go to /VX. You're going to see the same thing. So this is the active contract. You can see where the volume is already transitioning. So if we were going to place a VIX futures trade, one consideration that a trader might make is that this only has one trading day remaining before rolling to that next expiration. And this volume is going to be generally closing volume and transitioning. So there are going to be calendar spreads that are going to be traded as traders move from one contract to the next. So if I were going to initiate, or a trader were going to initiate a new position in VIX futures, many traders would be potentially looking at entering that trade, not on what's currently labeled as the active, but on the next available, which is where most of that transactional volume is happening. So that's where you're going to see that information is here in the trade tab in terms of those active contracts. Now, we've also talked a lot about in previous webcasts about things like VIX calendar spreads. Let's go back to the monitor tab. And in this particular group, I've got a couple of different calendar spreads that are going on. The one that I've got here is a futures calendar on crude oil, where I am long the current contract, the one that is that is closest to delivery. This is the April contract. And I am short the backdated contract, and I'm simply trading the difference between those two prices. And in this particular case, not working so well, except for today. So the expectation here is that the current contract, the one that I'm long, is going to get more expensive, which it's gotten less expensive since I bought it, which is not what I wanted to have happen. And the back month, I want to get more expensive, which has happened. So that spread's come back down a little bit, but I want that spread to tighten up a little bit because I want this contract to get more expensive. I want this contract to get, or this contract to get more expensive. I want this contract to get less expensive. So kind of working against me just a little bit over the time, the passage of time here in this contract. So we'll talk more about those futures calendar spreads. But here is the trade that we took before, and let's go back to that chart really quickly and kind of see where we are. And it's kind of moved down now. So one of the things that we could do, and I'm not going to get into the to flipping this over, but one of the things that we could do is, from a standpoint of directionality, from the kind of, not necessarily even the efficiency, but just the methodology and the thought processes as far as trend is concerned, is putting on a short position or initiating a short position in this contract is fundamentally and mechanically just about the same as putting on a long position, initiating a long position. We're simply changing which direction we're expecting the futures contract to go. So putting that trade on. So a trader could say, now that this is below our stop level, could look for a break back down to the downside and just kind of flip those over and look for this maybe to go back down to that price target down here and take that short position. In fact, some active traders, there are in the active trader ladder and the active trader focus tool here on the thinkorswim platform, there is a reverse button which takes the futures position closes the direction that the trader is currently in and reverses it and goes the other direction. And in a fast-moving market, that could be potentially effective. So we're not going to do that in this particular case because we're running out of time. My thanks to Connie Hill. My thanks to all of you for helping out and having a great discussion going on. Welcome to all of you who are brand new. Thanks to everybody else who's been here forever. Fill out that feedback survey. Remember to click on that subscribe button. Give us a follow in social media. And my thanks to our production staff. And of course, as always, to our pot of gold, our reviewers, Mindy and Nikki. Thanks, everybody. Take care. We'll see you soon. Bye-bye.